Good morning investors, now I will discuss India's Index of Industrial Production for December 2022. India's IIP increased by 5.31% in December 2022 versus 6.26% in November 2022 and versus 8.44% in December 2021, indicating India's industrial production continues to increase, but at slower pace on month-on-month and year-on-year basis. Manufacturing output increased by 4.67% in December 2022 versus 6.86% in November 2022, and versus 8.46% in December 2021, indicating manufacturing output continues to increase, but at somewhat slower pace on month-on-month basis and yearly basis. Mining production increased by 7.74% in December 2022 versus 9.07% in November 2022, and versus 7.69% in December 2021, indicating mining output continues to remain in good uptrend, but at slightly slower pace now. Electricity output increased by 7.62% in December 2022 versus -1.54% in November 2022, and versus 9.87% in December 2021, indicating electricity output rebounded from several months of downtrend, but still remains weak on yearly basis. Looking into details on months-wise IIP. India's IIP increased by 5.31% in December 2022 on 1-month percent change basis, while on 3 months percent change basis, it increased by 8.15% in December 2022, and on 12 months percent change basis, it increased by 4.25%, indicating India's IIP increased at slower pace on 1 month and importantly, on 3 months percent change basis, it looks strong. Manufacturing output increased by 4.67% in Dec 2022 on 1-month percent change basis, while on 3 months percent change basis, it increased by 6.61%, and on 12 months percent change basis, it increased by 2.65%, indicating manufacturing increased at slower pace on 1-month percent change basis, while on 3 months percent change basis, it shows continued expansion. Mining output increased by 7.74% in December 2022 on 1-month percent change basis, while on 3 months percent change basis, it increased by 32.2%, and on 12 months percent change basis, it increased by 9.8%, indicating mining output continues to improve at faster pace on 1 month, 3 months and 12 months percent change basis. Electricity output increased by 7.62% in December 2022 on 1-month percent change basis, while on 3 months percent change basis, it decreased by -4.27% in December 2022, and on 12 months percent change basis, it increased by 10.4%, indicating electricity output increased on 1-month percent change basis, but on 3 months percent change basis, it shows acute contraction. Looking into details, industry and market group wise. Primary goods output increased by 9.2% in December 2022 versus 1.14% in November 2022, and versus 8.3% on yearly basis, indicating primary goods output rebounded and now at strong level. Capital goods output increased by 0.2% in December 2022 versus 13.2% in November 2022, and versus 7.64% in December 2022 on yearly basis, indicating capital goods output weaker both on month as well as on yearly basis. Intermediate goods, infra and construction goods output increased by 3.63%, 4% in December 2022 versus 1.88%, 3.16% in November 2022, and versus -0.33%, and 8.18% in December 2022 on yearly basis, indicating their output increased at somewhat faster pace on month basis. Consumer durables output decreased by -2.23% in December 2022 versus 5.35% in November 2022, and versus -10.45% on yearly basis, indicating consumer durables output shows acute contraction on month as well as year-on-year basis. Consumer non-durable goods output increased by 7.38% in December 2022 versus 24.36% in November 2022, and versus 7.18% in December 2022 on yearly basis, indicating consumer durables output continues to increase. Overall, summing up, India's industrial production increased in December but at slower pace on month basis. India's IIP supported by bounce in electricity output post several months of downtrend. Continuation of strong mining and primary goods output, indicating lower input pricing pressure on finished products manufacturers. Looking at 3 months percent change, India's IIP shows good expansion and business activity in Q3, resulting in improvement in Q3 GDP. Weakness in capital goods output, indicating lower business confidence and private capital investments in December. Contraction on consumer durables output, signaling impact of high interest rates on consumer confidence and consumer spending overall.